All right. Hello, everybody. Welcome to a very special episode of Palantir Weekly. This is episode number 132. Very, very exciting day. We've got a lot to talk about. This is going to be a longer episode because a lot of things have happened this week. Number one, we got a massive deal with Wendy's in terms of powering their entire supply chain operations. Number two, we signed a pretty large deal with Microsoft in order to implement Azure OpenAI LLMs along with Palantir's AIP for the government. And the number three, of course, the most fun thing that happened today, Palantir has closed above $30 for the first time since February 2021. Very big deal for shareholders. It's been a long time coming trying to see this price action. We went all the way down to 6, I think even below 6 at one point in late 2022, just to come back here at $30. Palantir now trading at a $67 billion market cap. So we got a lot to break down. Now, I am going to be doing the least amount of talking tonight because I have a great panel with me to break down everything going on today. I've got Arnie. I've got Emir. And then I've got two people that haven't been on the show, but they are huge members of the Palantir community and probably will make many appearances over time. We've got this guy who's always on the show, real Matt Farley. Then we've got the meme lord himself, Mr.
Oh my
Garcia.
God.
And then we've also got, you guys probably saw him on an episode a couple months ago, good friend of mine, been in the Palantir community since day one, Holland, all the way from Colombia. Holland, what's up?
I'm actually in Conroe, Matt. I'm just 40 miles north of you.
Oh shit! What's up, my Armando?
Yeah. I'm in Cut and Shoot, Texas.
All right, we should grab a beer sometime, man. It'll be a good time.
Even for Texas, it's redneck.
All right,
it's 40 miles. That's basically next door in Texas. So
yeah, the weird thing is, I remember when I was a kid, I was born in Conroe, but my dad worked for Jacobs. Remember, I told you on it. So yes, he was a project manager, and the project would finish, and we go to the next one. So we were always moving, and we only ever came back to Conroe for weddings and funerals. And I hated both of them. But that was before George Bush International, so you had to fly in a hobby. And I remember that drive once you would head out of Houston. It was 45 miles through the wilderness, and now there's just no wilderness.
Oh, it's super exciting to have everybody here. So, Holland, I know you got to go in like 5 minutes, so I'm going to let you get the stage and just say what you want to say to the community because then you got to get out of here. But what does it mean to you for $30 on Palantir?
That feels good. $30 and a penny feels fantastic. That's what I think. I think it's overvalued? Yeah, a little bit, but that's a momentum thing. And I think Wall Street, some of your wiser investors are starting to feel what we've been locked onto for the past several years. They're starting to get it. You know what I mean? It does seem unstoppable. And I think it probably will continue to trade at a higher valuation.
Yeah, I agree. And I think that higher valuation we're going to talk about today, how it's overall maybe even justified. Last question for you, Holland, before you get out of here. What has this journey been like over the past 3 years being in the entire community?
I've chewed my fingernails about a lot of investments in my life. Like, some of the stuff I have a financial advisor that manages 90% of my portfolio. And I don't want him to trade or invest the way I do. That's stuff that I've already set aside. I've chewed my fingernails about a lot of investments. I've never worried about Palantir. I never worried about it at all. I knew they were going to make it. I could just feel it in my bones.
Well, $30. It's not bad. I feel $30 in my bones now. I love it.
I was right, and you were right, and Arnie was right.
Yeah,
Arnaldo.
We all were.
My guess is in a year and a half from now, we can come on the live stream and we're going to be talking about $50.
I think it's not crazy. I think that's not crazy. 18 months from now, I think that's not crazy.
All those buybacks. Just kidding.
Yeah. Look, there's going to come a point where their revenue is sufficient to really start buying back stock.
Yeah.
The Peter Thiel sort of like philosophy is like if you have this cash and you're buying back stock, you would. But I don't think that's necessarily true. Palantir's obviously gotten very good at innovating and really doing quite well without dumping tons of cash into it. I think they're going to get into a position where their costs aren't that much, and the revenue, they're just stacking money. I mean, how many billions do they need? What kind of rainy day are we talking about? They're gonna eventually, probably in the next few years, get to where they're able to buy like $2 or $3 billion of stock a year and up and up.
Yeah. All right, Holland, I'll let you get out of here. Holland's Twitter is in the chat and in the description if you guys want to follow him in there. And happy 30. Enjoy your weekend.
If you do
Holland.
follow me, don't expect anything too entertaining.
Yeah, you're just gonna get a ton of likes on your Palantir content. So there you go.
All right.
Thank you, Holland. See you later.
You guys take care of yourselves.
Bye.
All right. Bye, man.
All right. Let's go around the room. So we got a lot to talk about today, folks. Lots of deals and partnerships, the actual earnings, the emotions on earnings, the downfall we had on Monday going to a low of 2069, now up 45% from there at this $30 range. Is it overvalued, undervalued? Are the growth projections making sense? So lots of stuff to dive into. But before that, I want everyone to get 2 minutes to kind of give their overall take on how they feel about $30, how they feel this week is gone, and just in general, the raw emotions that they're feeling. I think let's start with Garcia, and then we'll go from there.
Okay. Well, thank you for having me. Everyone, Arnie, Amir, Matt, Amit. Thank you guys for, being good hosts. Oh man, $30. It does feel good to know that my conviction wasn't the right company the entire time, and it's not something that I felt like I ever was really gambling on, where I was saying, okay, I'm just going to invest in them because, the AI and that's it. Like it took a couple of months of me doing my own, I guess, research and connecting the dots myself, because everybody connects the dots their own way. For some it's valuation, for some it's how much they believe in the CEO. For some it's what is the share price in dollar amount. Like if it hits 10, I'm in, or if it's a certain dollar amount. And for me, it was really just, it felt good to be able to kind of start accumulating shares, because I considered myself like a new investor still. I've been really investing for only a couple of years, 4 years. So to finally start accumulating a good amount of shares and knowing that I'm not going to be selling out of them, I mean, it's I'm just here along for the ride, and it feels good. So.
I love it. I love it. I love it. Douglas, thank you for the $30 super chat. Missed the morning open and most of the close today, but a great channel. Keep hustling. 30 for 30. It is indeed 30 for 30. Arnie, your raw thoughts on $30 today.
That I've been investing for more or less 10 years, and I've never had such a wild week like this one. Because when COVID happened, essentially it was a it was a climax of emotions, but we had this climax of emotions in just a couple of days this week, especially at the market open on Monday. Like Palantir was down 15% after having been already slapped in the face. So it was like, whoa. And I had that moment of, I'm not sure I would call it fear, but at least that, oh, F. Because since I was all in, like on Friday, I sold the little parts of Robinhood, Tesla, Airbnb I had to increase. Then just getting smashed again, I was like, oh, be careful here. And then it was impressive, like already that we were at -2 before the closing. And then boom, the results were actually better than we ourselves expecting. And I would just connect a little bit with what we were mentioned, but now it feels maybe the stock is a bit hot. But remember that 1 year ago we were at 15, thinking, oh, like compared with the actual fundamentals, it seems hot.
Yeah,
and the fundamentals have been improving so much. The expectations have been improving so much that now we are at 30, and I'm not sure that we can say, oh, we are more expensive really than we were last year at 15. So now I see that is not unreasonable to really think, oh, maybe in 1 year from now, if fundamentals keep improving this way, in 1 year from now, we could be talking of, okay, maybe $50 is not unreasonable.
I agree. Amir, your raw thoughts on $30 today?
Yeah, I mean, it's expensive, but the stock is not overvalued. And I think the difference is important to understand, where expensive refers to how the stock is priced. And it's currently the most expensive SaaS company in terms of price to sales. Pricing is a near-term snapshot against where the stock trades. So, for example, you can do price to sales of what did they report the latest quarter and where's the stock trading, or you could do like forward PE, which is like a year out, but it's still like a snapshot of now. And Palantir's value is mostly terminal, meaning that it's outside of analyst projection period. So, for example, to make a basic reference, when you go and buy a home, for example, you do pricing where you look at what do similar houses sell for in the same neighborhood. You don't value like what wood was used to build this home, how will it depreciate over time, and so forth. So it's expensive now if we compare it to different SaaS companies out there, but it's not overvalued. I think it's actually fairly valued, and I've updated my model to represent that. And surprisingly, when I look back, Palantir more or less has traded at fair intrinsic value each quarter for like a year now. I think every quarter the business gets more robust, KPIs keep improving, investors have to update their projections. And as an example, I severely underestimated their profitability and how efficient their sales are. For example, I had them at 13% operating margin for 2024, slowly scaling that to 28% by 2033. And my midpoint was 18%. And I mean, Palantir is already there now. So I had them at 18% in 2028. They're already at 18%. So, I mean, as we discussed a few times before, bootcamps has still a lot of scaling to do. And I've never seen such a scalable and efficient ways to do sales for a SaaS company before, even though it's not going to be infinite. But yeah, the stock, expensive but not overvalued, is my raw takeaway. And yeah, the stock is trading around fair value.
Matt, your thoughts on $30 today?
Good evening. Good evening, everyone. I swear I'm not drinking, I promise. Hope everyone is having a great week. Pretty intense one, beginning Monday, and now obviously we're here. I think 30 is just testing the new waters, right? I mean, we were just there about a month and a half ago prior to kind of this Monday or last month sort of pull down to the low 21s, which is where I think I added a little bit more not too long ago. I think it's just an opportunity for us to find where the new settling spot is. Do I think we're going to continue to rally from 30? No, I think we'll find some sort of settling point between 25 and 30 and really wait for the next sort of catalyst, right? Because at this point, everyone's kind of excited. We're seeing north of 25% year-over-year growth. And with that, now we can kind of focus on, okay, well, what is next year or next quarter going to be looking like, right? We've already seen an up in the year-end revisement to about where I was thinking it was going to be with respect to revenue, 2.75 billion. I thought they were sandbagging the 2.6, but maybe they were waiting for some key contracts to come in and they wanted to hedge their bet. Now that those contracts have come in, maybe they're more inclined to raise it to 2.75. But it's interesting. I mean, I had a price target in my February article for Palantir at $25. I said it would probably run around between $20 and $30. And here we are at 30 with about 3 months left to go, 3.5 months left to go in the year. And so I might have to update that target a little bit, right? It's not going to go up to 35 or anything like that, but it makes me think, I mean, if we're here now and we continue to build on this, is really the range that I should be looking for between 27.5 and maybe $32.5, right? So it's nice to be able to see. And the reason why I was hedging my bet at 25 was because we needed to see that continued growth year over year continue. And at the time, we were just coming off of a 16% year over year growth, and it was trending down. And that last fourth quarter last year is when it came back up to like 18 or 19%. We've steadily been growing on since then. So it's nice to be able to continue that trend. Even if it stays at 27%, that makes me happy. Would I be enthralled to see 30 or 35%? Absolutely. But the law of big numbers is going to continue to kind of play in. And I think it's going to be tough to continue that unless we continue to get extremely good customer count growth in the US commercial side. in the 70 to 80% range. Because now if you're staying at these larger numbers and you're in the 200 or so for US customer count, and you're still growing at 70, 80%, then you can only anticipate that the top line revenue will continue to grow. But anyway, all that to be said, I'm excited. It's nice to be validated in your thought process. And at the end of the day, it's a phenomenal product, and people that I know at work love using it, and we couldn't see it any other way.
I love it. Arnie?
I would jump into a more philosophical question. So not much into the details, but as an approach, Chad in the chat asked, how do you value a rocket ship? Because that's literally what we are dealing with now.
So how about we answer this question a little bit later? Let's go through the numbers and then we'll get into the full valuation.
If you want the answer, not well. If you look at Rocket Lab's price,
that's a good point.
$2 billion compared to 60. I mean, yeah.
Yeah. Well, so let's get through the actual numbers, and then because the numbers will help us bleed into this larger philosophical question about is Palantir overvalued or undervalued here. My raw thoughts on today was that it was awesome. I mean, just as a community thing, I was live. We hit $30 live. There was literally 1,000 people staring at a single candlestick go up from $29.99 to $30. And whether it holds 30 or not is irrelevant. The broader point is just, it's a really fun journey, and it's a fun journey that is exciting. If you feel there's something unique about Palantir from the nature of Carp, the company, whatever, there's also that unique just culture in the community of people that like are taking time away from work just to see a single tick up. And you're not seeing a single tick up to see the money, right? That 1 cent doesn't make all the difference in the world. It's just part of that feeling that you hustle to get here, and you invested in something and you believed in something that the world didn't believe in. So it's been really fun, exciting to see. I think it's a great day, and we'll see how it holds up in the future. Do
you think
in the next coming weeks as well?
Were there to see the tick or to see your expression by
I think probably both, but I think people were there to be with the community on a monumentous moment. Like February 5th, when we finally broke through $22, or like really $20, because we were stuck below 20 before Q4 earnings. People were there the whole day to just see it happen. And it's special, dude. It's why Carp is embracing retail. It's why Chad and Ileana are starting to engage with us. It's because this is a passionate community that is a moat of Palantir to an extent. When you have an investor base that is actually going to believe in you, and Amir was perfect a couple weeks ago when he said, dude, the analysts are stupid. There's no way in hell Palantir does $650 million, because he understands the company way better than Citibank, you know? And so I think that's a big deal.
You know, I've been thinking a bit about this past earnings, and I think there are 3 layers to the earnings. So the first layer, obviously, is when you look at the top line growth rates, and that was obviously super impressive. I mean, we saw some amazing growth rates across all top lines, like
I'll bring it up right now.
Commercial revenue.
Yeah.
And then we have the second layer, is where investors start to look to see why. Like they look at the comparison period was weak, and they see that, well, quarter over quarter is a bit concerning because it's slowing down. And then you have the third layer and that's when you look deeper and see that they are improving across all KPIs, like sales efficiency, customers are scaling up, spend profitability is ramping. The organic growth, meaning if we exclude SPAC, which was a drag, it looks amazing. The growth rates there, like 79% US commercial year over year, 30% revenue. So we're back to 30% if we exclude SPAC, 40% commercial year over year. So I think there are 3 layers. And I think most people that are investing in Palantir can look through like that second layer kind of BS and look at the deeper level and start to understand that, oh my God, this business is going places.
Yeah, to expand from that, and I think that gets us into this conversation, which is growth. So the first question here, I'll start with you, Garcia, in a second, is do we think this growth is sustainable and going to accelerate? So I think the biggest shit all of us have got from the broader investing community over the past couple of years is Carp keeps talking philosophically, but he doesn't really have the growth numbers to back it up. And Palantir is, as a result, overvalued because the growth is not there. Now that's changing. And that's changing because I think of this slide, which is one of the most important slides of the deck they put out. They got a large wholesale insurance brokerage firm to sign a 7-figure 2-year deal within 16 days of a boot camp. Life sciences company, same thing. In 6 weeks, 7-figure deal. A leading convenience grocery store chain, 25 days, paid pilot conversion, and now they're looking into an enterprise-wide contract discussion. That to me is just exceptional. It is a fundamentally differentiated approach to selling software. And now that we're at 27% year-over-year growth, I do not think we are de-accelerating. I think the company knows how important that 30 number is. All of Wall Street really cares about 30% top line ARR growth. And so I think they're going to get there at least within the next 2 quarters, latest Q1 of 2025. So Garcia, we'll start with you. Do you think the growth is going to accelerate? And as a result of the growth accelerating, do you also think Palantir becomes technically undervalued here? Oh, you're muted.
Okay. Can you guys hear me?
Yep, you're good.
Okay. So for me, the way I see it, they're getting into every single vertical, and that's something that we've all kind of known as investors from way back, from whenever we first started building our conviction was, oh, wow, these guys can start building verticals in hospitals and in every business that you could even think of. There is a use case for Palantir there in some way or another. You could kind of find a use case there. And it's one thing for us to believe that and think that, but then if they don't perform, if they don't land these customers year over year, then that thesis doesn't really matter. But the fact that they're closing these deals, that they're actually closing them. And on top of that too, I think Alex Karp has mentioned that you're not going to get the customers at the very first bootcamp. A lot of times you have customers that want to shop around. They're not decisive. Management isn't really there yet where they should be. So they go to this bootcamp, even though they are blown away. Maybe they get a little gun shy where they don't want to commit right away. Even if they see the results, they're going to say, oh yeah, let me go to C3 AI. Let's see what they can do for us. Or let's go over here. Their steak dinners are better, or their PowerPoint slide was very flashy. Let's check them out. So it's going to take them a couple tries, a couple boot camps to actually get some customers. Or we have some clients that leave and they might come back in the future, kind of like Germany and their police department. So that's the way I see it. And not even counting the defense, like the military contracts. Like they just renewed one with U.S. Air Force. It's a small deal, one year, $8 million. But
yeah, for those that don't know, we just got a new contract today, 1 year, $8 million from the U.S. Air Force.
Yeah, and that's peanuts when you think about how much other defense contractors get. But this is just the beginning. This is kind of like a trial. And once they actually start getting these bigger deals, you're going to have them with the Space Force, Navy. Each branch is going to have their own, and then you have NATO. So you have these massive deals coming down. So I see it happening down the pipeline.
Amir, your thoughts on growth accelerating? If you want to share any charts that you have, you can share them now.
Sure, I have a lot. So,
okay, so then share me the slide that is specifically about how you think of top line revenue growth, or whatever slide you want to share to answer kind of that broad question.
Yeah, sure. So 3 charts we can look at quickly. I think we're not nearing a top anytime soon. As we spoke about, organic growth is already at 30%. But an important aspect of all of this is first, net dollar retention, which keeps accelerating. And we do know that roughly around a year ago now, AIP and bootcamps really started to gain a lot of customer acquisition for the company. And we know that NDR is calculated for customers that have already been with Palantir for a year. So this should start to ramp up, which creates an interesting dynamic because, let me see, this chart here. For the first time since they started reporting this, we can see that average revenue per client actually went up. So since they started reporting on this number, we can see that in 21 Q1, it's only been going down. So average revenue per client has only been going down. And this was the first quarter where we started to see that accelerate, which also corresponds to net dollar retention going up. And the interesting dynamic there is, while quarter over quarter growth was not too impressive, I'm not too worried for the future, because if we look at the deal distribution, we can see that they, for this quarter in particular, captured a record amount of deals above 10 million or more. So yes, I think there's still a lot of expansion in the growth rates to do, simply because they're going to start scaling up those initial AIP customers. When basically AIP was given out for free just to capture market share initially, they're going to start to monetize that. So no, I'm not too worried about top line growth decelerating.
Okay. Arnie, your thoughts on if 30% growth is sustainable?
Look, we started the beginning of the year thinking, we wish we get again to 30%. And boom, like if we exclude the impact of a SPAC, which contributed negatively to the year-on-year growth, because SPACs, rather than expanding, they just declined in earnings. Actually, have been cut in half. The growth rate was not 27%, but the organic growth was 30%. Now, that to me is the big hint, the big strong signal that personally I was not expecting. Like, I wished it would have happened. And personally, I was expecting it to be more toward the end of the year. So essentially, it's like we are cutting timelines. And the reason why is exactly the slide that you shared previously, which is so significant because it tells us that not only Palantir is getting clients, but is getting clients that are really willing to spend a lot in relatively little time. It's like Palantir right now has two velocities, two speeds. One with like the legacy customers, which tend to be like big but relatively slow, and the new set of customers that are big but they're willing to spend a lot, because the deals over $10 million, 27 deals closed in the quarter. It's like 2x what we had last year. So the go-to-market motion is truly getting there. The clients are eager to spend, and there were like a couple of comments in the earnings call that stuck to me. Like Sham described the two examples of a hospital and a manufacturer, but the archetype was like 1 year, well, a couple of million revenues. Second year is more about $5 million revenues, which for software, enterprise software, in a year, that's already a very big check. And then, you know what? Third year, bam, $20 million deal. So yearly. So $20 million deal is like 4x the average revenue per customer. So they are getting deals that are set to increase this average, as Emir underscored. So there are many points. Now I'm just searching for the chart among the 100 many charts I have to complete, just to hint at a little thing that Emir shared. Okay, here we are.
I know we're going to get some new Arnie charts on Twitter over the next week, now that we have new numbers.
Okay, so this is the chart that basically sees what Emir was showing, that the net dollar retention has finally started to trend upwards after a decline but that reached 107%. Now we are at 114%, meaning that the existing customers as of last year are expanding 14%. And these include like the biggest customers, the top 20 customers, and so on. But as the CFO finally underscored a little bit better, this metric understates the real impact of the growth, because the new customers that have been acquired in the last 12 months, so the new customers, are the one actually driving the growth. And from this chart, we can see that this 27% growth that we got comes from around 14% from the new client, from the existing customers. But the new customers, so only the ones acquired in this last year, contributed for 13% of that growth. So essentially, how Palantir keeps increasing growth is by expanding more the existing customers and by getting more new clients that are heavily spending. So this dynamic is what tells us, okay, Palantir has finally shifted gear, and we are really ready to rock.
I just want to add just quickly so people at home understand like what we mean by SPAC impact. I mean, at one point, SPAC revenue accounted for 32% of all US commercial revenue. I mean, that's like a third was just from SPAC. So when that goes down to like 3% for this quarter, that's a huge drag. Last year it accounted for 16%. So 16% of US commercial revenue last year was 16%, and this quarter it was 3%. So just people understand like how big of a drag that is on top line revenue. So when we talk about organic growth, which is what really matters, like how Palantir grows organically, already being at 30% is actually a huge deal.
Matt, your thoughts on if this 27% becomes 30% in the next couple quarters?
I'm glad you rephrase it that way, because you stated earlier if we think we're going to consistently grow at 30%, and I'd say let's get there first before we say.
Well, we are there without the SPACs. Technically.
Oh, I'd like to keep the top line revenue with the top line revenue, and but anyway, my thought process is. You know, I'm going to hedge my bet. I think they've done a phenomenal job thus far. I think with the way that the commercial customer count has gone, am I confident they'll get there? I would say it's likely that they'll touch 30%. But I guess I'm curious as to, you know, how long is that sustainable, right? I mean, you're getting to a couple $2 billion now of annual run rate. You know, 30%, that means you're basically doubling your revenue every 2.5 years, and that's pretty expansive to ask when you're getting closer to $3 billion, right? So, I mean, if you think about it in that perspective, if you were to continue at 30%, then, you know, by 2027, you should be expecting closer to $6.5 to $7 billion of revenue for full year 27. Maybe my numbers are off by a year, but regardless, that's asking very quick growth, and it's a lot, right? I don't know with the amount of customers that we've gotten, even though they've grown significantly. If you think about it, you would need a lot of customers for the average customer count to be able to grow that way, right? I think we're averaging like 4.5 million per customer. I think at this point, so if you cannot roll that out, you know, you're going to need a lot of customers to be able to get yourself to maintain that 30% growth rate. I'm not saying it's unachievable. It's just, for me, I'd rather wait a few quarters before I truly, you know, get to that point where I'm like fully confident, right? I mean, just as you guys were saying, and I'm not trying to be the bad guy in the room here, but just as you guys were saying, I mean, at fiscal year 24 earnings, we were sitting there being like, will we even really get back to 20% year over year? And we've been fortunate based off of a bad comp, as Amir was saying just at the earnings call on Monday. You know, last year 2Q was a pretty bad comp. You know, is that the reason why we're at 27% and not 22%? And that could very well be. And so I'd like to get a couple more quarters under my belt before I'm diving both feet into the pool. I think we're already to a place where, for me, you're kind of testing the upper edge of the valuation, where I would consider it to be super overvalued, right? I think that this is in the right band, but I think before I, you know, lose all sorts of reality, I would wait for another quarter before I really make a judgment as to if, one, we could even get to 30, or two, sustain 30%.
Can I think that was everyone, right?
Yeah,
Can I just interject a question to this lovely panel? So interrupting your program just briefly, Amit, because there is actually one thing that is a bit concerning until we understand why. So I'm gonna share my biggest concern, and maybe we can reason together. So looking at the net addition of customers, we added 39 customers, which is not a lot, not very impressive if we consider this. So if we look at how many boot camps they ran, we know it was roughly around 300, if I recall correctly, for Q4. Then it doubled in Q1, and then roughly doubled again for Q2, which is what they told us at AIPCon. So we roughly had like 1.2K boot camps in Q2 and roughly 600 in Q1. So it should mean that we exponentially scale the amount of customers acquired because we're running just so many more bootcamps. I mean, it's doubling quarter over quarter for 3 quarters in a row. So why did we acquire less customers this quarter than the previous one, or even the Q4 one, where it was only like a third of the amount of bootcamps ran as in Q2? So can we discuss this, go around the table and see what people's thoughts are on that one?
Garcia, any thoughts on that? You're muted again. All right, you're good. You're good.
For me, I think it boils down to the clients and the leadership that's still stuck in their old ways. And it's less on Palantir not showing the results that they're looking for. So what I think, and this is really just me just guessing. I haven't been to a boot camp. I don't know the details.
Yeah, we're all spitballing, trying to figure it out.
Yeah, so what I would assume is going on is that the customers and clients, or the potential clients, are seeing the results with their own eyes, but upper management is still stuck in their old ways, and it's so entrenched that they're not moving at the speed that they need to. And I think it's going to take a couple more boot camps for them to finally come around. So even though they attended the first couple of boot camps, I think it might take them coming back to another one to then start getting signed up. And I think the second thing is, I think their growth is going to be, it's not going to be a nice, even line. I think it's going to be a little lumpy, but all in all, I think it's just going to be up and to the right in the long run.
So if I understand you correctly, you expect this is actually trailing a couple of quarters. I mean, we know that we don't have conversion rates for each bootcamp, but one would still think that if you double the amount of bootcamps ran quarter over quarter for 3 quarters in a row, that you should see some sort of exponential amount of increase. But you if I understand you correctly, you're saying that it's actually trailing. So what we saw this quarter may very well be the conversions from something like a Q4, the amount of bootcamps ran there. So this 1,200 for Q2 could be rewarded in 1 or 2 quarters more, like from this point. Did I get?
I think so. I think it's just the people who actually make the decisions on whether they sign Palantir or not. I think they're the ones who is going to be very hard to change their mind. Like, I think the guys who are, who are touching the product, who are hands-on, I think they fall in love with the product, and if it was up to them, they would. If it was up to the people going to the boot camps to sign up, I think we would have a lot more. That's kind of my thoughts.
Real quick, my chime in here is that we might just have had a lot of boot camps with the same clients. So even though the boot camps doubled, to close those clients, we might have had a bunch of them come back. So the actual raw number of boot camps as the denominator might not be the best for the conversion. But that would be my take on it. Arnie, or let's do Matt first. Then Arnie.
I was going to say, I mean, so let's just do some quick math here, right? I'm not good with it, but give me some rope, because you guys know I'm not the best at it. So $275 billion in revenue. We're currently at, let's just say we discount some of the new clients that have come in this year to get us to the 593 in terms of customer count. We just say 500 customers, right? So if we actually want to continue to grow at 30%, right, and really get to that $6 billion revenue mark by 2027 timeframe, because you think, if you get to 2.7, 1.3, 1.3, 1.3, that gets you to the $6 billion of revenue for fiscal year 2027. Then if you take the current kind of revenue per customer, which is about $5.5 million, using that 2.75 divided by 500, you get the $5.5 million.
Wait. You can't do that. 3% of the
why not?
Because 3% of the customers account for 46% of the revenue. So you need to remove the top 20 clients to make like an average, or you're gonna get some very inflated numbers.
Okay, so then this is even this number then would be aggressive from what I'm about to say if you want to remove those top. Okay, so let's just say it's the 5.5 million inclusive of that top 20. Because I think if you exclude it, it's closer to 4.5 million, if I remember correctly, something in those lines. So in order to get to that, set 6 billion divided by that 5.5, you're gonna have to have over 1,000 clients, right? If not, and if you want to do the 4.5, million per customer. You're going to have over 1,300 clients. So we're sitting at 600 clients today. So between now and 2027, we're going to have to double our customer count growth. That's the number that we really have to worry about. How do you annualize that? I don't know. I guess that would also have to be 30% year over year for the next, I guess, 2 to 3 years for us to really be able to guarantee $6 billion or that 30% annualized revenue rate by 2027. So that is the number I guess we have to consider which obviously over the last year we achieved, right? 41% for customer count growth. And a lot of that was led by US commercial. But if we can maintain that 30% annualized or 40% annualized customer count growth, then I think we should be okay. But if you kind of go back with what Garcia was saying, which it's lumpy, whether it's lumpy due to revenue, whether it's lumpy due to customer count, kind of coming in waves, then I think we might be troubled.
Arnie, your thoughts on eventually getting to 30% growth?
Well, as we mentioned during the live stream, we sort of went from trying to find hard information that was positive in a couple of years ago. When we were looking at the reports, it seemed like, things doesn't really seem to shine, but let's find the information that matters, that tells us, okay, we are in a good spot. Now we are more or less in the opposite dynamic, where it's hard to find something that doesn't really shine. So when we see something like that, we need to try to think, okay, what could our judgment miss that belongs to the holistic picture? So it is true that seeing a slowdown in new customers is kind of meh, especially compared with the last quarter, which was north of 50 new customers. Now we are more in the 30. So I would say, why the slowdown? But there are many dynamics in play. I think both of you are right in the sense that it could be that Palantir just focused more into expanding the new customers because of the go-to-market traction into getting new customers now is effectively going well. And what we're lagging a little bit, as we underscore when we were showing the net dollar retention, was, okay, you have all these big, potentially very, very big customers that are sort of sleeping giants. Let's focus more a little bit on that. And the fact that maybe if we see again the chart from Emir, it was because last quarter we had a little spike, but maybe all the contracts were closed into, let's say, the last day of the Q1. They'd enter in Q1, but if we sort of normalize and we consider rather than quarter by quarter, like a cluster of 2 quarters, trailing 2 quarters, we would not see that impact. But there's something that I wish to bring your mind with, which I would say is not really concerning because we know that overall the numbers are working and are working very well, but I still struggle to find a real explanation here. So essentially, when we see this slide of the snapshot of the US commercial, we see crazy numbers, revenue plus 55%, customer count plus 83%, remaining deal value 103%, so doubling. That's great. And a lot of deals closed. All great. There is this number, US commercial total contract value closed in the quarter, which is a 262%, plus 152% year on year. And I was trying to compare this number with the previous quarters, and we got 286 in Q1, 343 in Q4, and Q3 last year, 252. So I was trying to understand, okay, are we getting a negative sign here of slowing contract close in terms of big value? they're trying to now focus into smaller deals, or it's just all noise?
It's an interesting question. So your argument is, hey, does this do these numbers kind of indicate going a little bit more downstream versus trying to get those top 20 types of clients?
That's a big question. Because maybe they're just focused into getting the first deals, knowing that it takes just, as we mentioned previously, like 3 years to start getting like the big bumps. So it's like, okay,
right.
Isn't it very interesting that it decreased quarter over quarter despite having this dynamic? I'm just going to quickly share, as we spoke about before. If we look at like how big the deals are, I mean, we had 27 deals, 10 million or more, but the TCV decreased quarter over quarter, even though the previous quarter was like the weakest, one of the weakest ones for 10 million or more. So it's not like they focused on smaller bigger contracts before. Do you think this dynamic relates to that? I mean, yeah, that's a very good question. I haven't really analyzed that, so yeah, I don't really understand what's going on there either. Because just looking at this chart, you would assume that the total contract value would be going up rather than down.
So that's exactly why I was surprised by looking at the overall dynamic, by looking the deals closed. I was expecting this number to actually be like very up compared to quarter on quarter, and it was actually a decrease from 286 to 262. So maybe it's just noise due to, okay, we can't really foresee when the deals are closed. Therefore, when maybe you sign a very big deal at the beginning or the end of the quarter, so that impacts the numbers, but it doesn't really impact the dynamic. Just curious.
The one thing that I'm curious about, it's a lot of what CodeStrap's talking about in the chat here, is the partner revenue, right? And how much has that really been attributing? And that's the dark horse where I'm kind of like trying to sit out there, because we don't get that data split out, right? And now that you have these consultancies like PwC and many others really starting to help from their perspective, looking and going in and say, ooh, you know what would really help here? You know, that Foundry platform that we were just looking at a couple of weeks ago when we got that demo, we could implement this here and it could really have that help. That's something that is, I think, probably within the last 12 to 18 months. And as we know very well, as Palantir investors, there's always a delay with respect to getting customers on board of 12 to 18 months before we actually truly see any sort of revenue. And so I don't know if that's a good question that if we ever get into the executives or maybe some of the leadership and Palantir on the horn, we could actually dive into and figure out, because splitting that out, if that's something where you're seeing that interaction or that revenue growth growing at a much faster pace, and that's a segment within that's growing much faster, and the traditional way of Palantir selling normally how they have been is slowing down, then that could be the wave that we are actually seeing, right? That traditional boot camp and also coupling with that new partner program are the new ways in which they have these new waves of revenue kind of growing. And we should stop thinking about the old revenue ways of growth and only think about those going forward, which I think we've already kind of done using boot camps, but I completely disregarded that partnership program.
You know, the interesting part here is that I'm assuming no one has anything to add to Arnie's observation.
No,
I don't have any answers, Arnie. So it's an interesting dynamic there that you and CodeStrap mentioned, because they had partnerships with Accenture and these consultancies even before AIP and boot camps, and we were like struggling, like, okay, how is this gonna work? Like, where are they selling? How are they selling? Like, how are they showing the value proposition to potential customers? Who is the potential customer? Who are you going for? Now that we do have boot camps and AIP, there's like a clear way for them to sell Palantir products simply by running boot camps of their own. And proving time to value outcomes and all of that. But they actually had partnerships even before bootcamps were a thing. And we heard like nothing about it. We got like a press release like, yeah, Accenture is partnering with Palantir. And you're like, well, what are they doing for Palantir?
Yeah,
like,
what does that mean?
Yeah, exactly. Like we had no idea. Now it does make a bit of sense, like how they will utilize that. But yeah, I'm really curious about what kind of impact that will have, because Palantir does not have infinite personnel to keep running bootcamps. They will have to rely on consultancies to assist with that if they want to keep ramping up bootcamps and scaling that as they have been doing.
Yeah, I agree. And it's going to be really interesting how the go-to-market continues to evolve. That question on conversion that Dan Ives basically asked without asking, still no answer yet. And I get it. I get why they're not answering, but eventually we probably are going to figure out, right? And I guess we'll see where it goes from there. Arnie, we're going to share anything, or could I move on?
Yes, I'm just searching for the chart among the 1,000 charts.
Okay, so while you're doing that, let me ask this question. So this slide I think is also really important. Year-over-year revenue growth versus adjusted operating margins, which helps understand the rule of 40. So you have 27% year-over-year top line, 37% adjusted operating margins. If by, let's say, Q1 2025, this top line is closer to 31, 32%, and this adjusted is 40%, Palantir is going to be the only SaaS company in the stock market that's growing top line at 30 with adjusted operating margins at 40. The only other current company doing that is CrowdStrike, but they're likely going to take a hit on that top line. So let's start with you, Garcia. Do you think Palantir growing at 30% top line with really nice adjusted operating margins is going to further justify the market giving them a premium? Because CrowdStrike has been expensive since they've gone public. They've only gotten cheap now, if you want to call this price cheap, since going public because of this Y2K fiasco. So do you think this dynamic of 30%, 40% margins keeps them with a high premium?
I think so. And I don't think Palantir will, I mean, never say never, I guess. But if I were to bet on it, I don't think Palantir is ever going to get to a point where deep value investors will say, this is my buy point, and it'll actually hit that point. I think they will get left waiting forever. I think it'll remain overvalued in the traditional sense. I mean, for years, it's just going to be one of those types of companies because of the quality and because of the. And I think it's also too what investors they call, what do they call it, like the macro trend or the cycle, the super cycle. You know, that each one has its own super cycle. You have EVs, solar, internet, whatever. This one is the AI super cycle. You know, AI. And who is the company that is helping all these AI companies, and who is the one that's going to be using, you know, benefiting a lot from it? It's going to be Palantir. So I think it's just going to remain at a premium level for the longest time. But, you know, it is going to be bouncing up and around between ranges. I wouldn't be surprised, you know, to see it bounce between 35 and 25 for the next couple of months. So for me personally, I'm just going to keep, for me, my new buy point is just any price below 30. If I have a good amount of reserves, I might start buying at 28, at 29. I might start buying a couple shares here and there as a DCA type of thing. Like I don't DCA robotically where it's every week 25 shares. I feel like I'm a little bit more
opportunistic.
Yes, that's the word I'm looking for. Like more opportunistic, where if I see a good dip, you know, I might buy 50 shares, you know, 75 shares here and there. So, but I do want to be buying shares at least a month over month. I want to make sure I'm still adding to the overall portfolio. Even if it's overvalued in the traditional sense, I'll still buy a couple shares just to kind of keep that ball rolling. And for me, psychologically, just get used to buying at a premium. But I think it'll stay valued in the traditional sense.
Arnie?
So visualized what we were showing in terms of the rule 40. What we see here is Palantir continuing to deliver black magic. Why is black magic? Because in SaaS, if you can accelerate growth while decreasing the amount of money you actually spend for growth, it means you're doing something that is peculiar. It means like I spend $2 less and I deliver $10 more. Like there's something weird going on. And this black magic is actually AAP, because thanks to the AAP bootcamps product, like the dynamic of a company is clearly changing. And I think this is one of the best example. Also, Carp in a comment wrote, okay, the academics will try to scratch their head into trying to understand how the hell they were able to do this. And AI combined with having the right product at the right time is actually the key. But if I have to ask you, do you think that in this dynamic, the number of employees Palantir is currently having, is it increasing or decreasing?
Say the question again, Arnie.
Number of employees, given the high, strong demand that Palantir is currently having, do you expect the number of employees to increase or decrease?
In the future or now?
Right now, like in these quarters.
I know that it's, well, I know the answer, but so I'll let
So
someone
shut
else.
up.
I would guess so. I would assume so. I think if the opportunity is presenting itself, I think it would be wise to use some of that money that you have saved in cash, collecting interest, and use it to kind of take the opportunity that's being given to you right now. You know, like right now, you're in the spotlight. You know, right now with the partnership with Microsoft and everything going on, I think it's time to take advantage of it and just invest a little bit more money in employees.
Matt, what do you think? Like, do you think the number of employees is increasing or decreasing?
I mean, I think it's increasing, but at a slower rate than the customer count.
Mm-hmm. Okay,
there you
so
go.
this is what really surprised me. Like, I was thinking of the same line of you. Like, okay, if the demand is skyrocketing, you need to capture that opportunity, trying to run as most bootcamps as you can. But in reality, the number of employees is actually decreasing. So this could be like potentially negative. On the flip side, it makes the numbers that we were discussing, that Palantir was accelerating growth while expanding margins, even more striking. It's like literally you have something that is going on its own now. And if you can expand the margin, the number of employees don't increase. The number that really skyrockets is the revenue per employee, which, by the way, is already top notch compared with the biggest SaaS companies out there. Theoretically, we are talking about a scalable business, and scalable means that the bigger the size, theoretically, the better you should be. So when I look at Salesforce and ServiceNow, which are like 4x bigger and 10x bigger than Palantir, I would expect a revenue per employee to be way higher than Palantir's. And actually, we see quite the opposite. Palantir on the road to go at almost 2x the revenue per employee compared with the other two. So this tells me, okay, the dynamic is truly working. It is true that despite a small gem, Palantir is literally already the best enterprise software in the world. Just it needs more scale to prove itself. But on the flip side, I'm still confused. What I'm missing? Why should the number of employees decrease right now?
Well, one thing is a lot of the employees are leaving Europe, right, to come to the United States. I think we heard that from somewhere, or maybe I saw some stats on that. So although the number is decreasing, we are getting a redirection of the talent, which maybe is what you need, because if you're growing 83% year over year in the United States, then you probably need a lot more people there. But I think eventually they're going to have to start scaling more employees if they begin to expand top line internationally.
Well, yeah, I think about it from a 2017, 2018 perspective. They were just building Foundry, right? And you know, our UDoc was one of the first few companies from a commercial standpoint. And so I think that they were also feeling out, you know, how do we build this product? How do we monetize it? How do we build these applications? Now that you have a lot of these applications, you might not necessarily need as much R&D. And so many people might just be sitting around saying, well, I don't have as much to do. And they might take that opportunity to go and start their own companies, or, you know, do something else. Coupling with the sales piece, people it seems like they're going more so with other people and doing these boot camps and in the partner programs rather than actually having a true sales force. So you might see some impacts on the sales teams as well.
Amir?
And just
Garcia, go ahead, then Amir.
I think instead of, I guess, and that graph, it shocked me, that Arne shared. It caught me off guard. I thought they would have increasing number of employees. It really did shock me. But I would hope that they would start putting a little bit more money, as much as of a dirty word lobbying is. I do think hopefully they are investing more money into that now, or whenever the new president comes in, or however it works, But I saw a video of an Anduril. I think he was a co-founder or he was an executive at Anduril. And he was giving a talk, and he was saying, as much as the product is great and the people on the front lines, they love it. The people, the technical guys, they love it. Everybody loves it. If the guys at the top, they don't want to sign it, they don't want to sign up for it, they don't want to allocate the tax dollars for it, then nothing's going to happen. You can have all the support you want from the bottom guys, from the little guys. But if the guy who actually signs the paper and says, we're signing them for 10 years, a couple $1 billion, if they're not motivated enough to do it, it's going to be very, very hard to happen. And he was calling it kind of like of a double vice, where if you can do the lobbying as well as you could do it with getting the guys at the bottom to like the product, you'll have these people, the little guys pushing for the product, talking to their higher up, saying, hey, we got to use this product. And then you have the lobbying pushing down. I guess he called it like a squeezing effect, where you're going to squeeze the results out, and you'll have this explosion of contracts. So I would hope a lot of the money, or not a lot, but I hope they do start focusing more on that as well.
Mm-hmm. Yes, it was Troy Stephens, who's one of the very, very early employees of Palantir. So he was essentially one of the first sellers to the government, and he realized that he was making the strategy wrong at the beginning, because he didn't really understand yet this idea of the double squeeze, which is what they made very well since the beginning, thanks to the lessons they learned in Anduril, because now he's a co-founder, co-partner, or whatever into Anduril.
Yeah.
Amir, your thoughts on the employees decreasing?
Yeah, I mean, I've been observing similar dynamics for a while, also in the distribution of employees. So we know roughly around the decrease started somewhere roughly when CARP said that Europe isn't growing. We're going to refocus our staff to where it is growing, meaning the US. But also a different interesting dynamic that I don't think many people perhaps know about is, if we use SBC as some sort of an indicator, you would assume that most of Palantir employees are engineers, because that's like, well, they haven't been good at sales historically, so you assume that not a lot of SBC would go to sales and marketing. G&A, I mean, fine, but you would assume that most of it goes to R&D in terms of SBC, but R&D is actually the least by a lot. And sales and marketing and general and admin make up most of the SBC, which is also an interesting dynamic that you wouldn't expect. Like when you hear Palantir, you think like engineers, but looking at the SBC distribution, like it tells a whole different picture. So there are multiple interesting dynamics, especially talking about the decrease in employees. If we had some analysts on the call, would have been a good question, but unfortunately we don't. So yeah, we can only speculate. I suspect that it started around the time when CARP made that statement. I think it was it Q3 23 when he said that, yeah, we're going to focus where we are growing, and that's not Europe. So we're going to reallocate our resources. And I think that's roughly around either a quarter prior or that quarter that they started the decrease in employees. So makes sense, sort of, I would say.
Emir, do you think we will have any chances of having other analysts in the next earnings call? I know this one was disappointed for you.
Yeah, I lost hope. Like man,
There,
like I
there,
think
there was a stark difference because on Robinhood's call, dude, they had like almost 12 analysts ask a question. Palantir, we had 2, so it was a stark difference just listening to the call. You know,
I've seen like earnings calls of 800 million market cap companies have like 10 analysts, and we know that Palantir has coverage from like what is it, 18 like analysts or more. Like where are these people? Why aren't they allowed to ask questions? Like I understand the whole beef with Corp has opposed analysts multiple times. Famously, almost exactly 2 years ago, he said like, well, analysts have you at this, like what do you have to say to the analysts? He's like, well, I don't care what they say now, I know what they will be saying in 2 years. Exactly 2 years later, we're hitting $30 per share, everyone's upgrading Palantir. So like Carp is right, but still there are a lot of questions, and not every analyst question is gonna be bad. Like we need this. Like if you care about retail investors, you want us to understand the company as much as possible, and we do need analysts to ask those hard hitting questions, even though you might find them stupid at times. Like even like companies like Microsoft, Tesla, like the biggest of the big, have analysts who are clueless. Like you will never get away from that. But still, no, I kind of lost hope, Arnie. Like I was like, well, they invited Tyler. My boy Tyler is gonna hop on.
how do you know they invited Tyler?
He said that in his target price update that he was at Palantir's HQ.
But that doesn't mean he was invited on the call, right?
No, that's what I'm saying. Like he wasn't, but I expected, since he like was allowed to visit Palantir, that they're gonna be like, oh, all right, I'll hop on the call. But nope, he wasn't
consider
allowed.
that when an analyst gets invited, it is reasonable that he speaks with investor relation. And personally, when I was going to the companies, I was speaking with the CFO, maybe also the CEO. So it's like you have a direct connection. And my expectation was at least we will see Tyler, which will be a bit of annoying because he's a quite numerical guy, but it didn't happen. And I would say these questions from more numerical guys can be annoying. For instance, if you look at the ServiceNow earnings call, they always have like tons of questions, very, very numerical, like, but the total contract value, like the current remaining performance obligations increased by 20%. We were expecting 22%. Why? So it's like, come on, shut up. But at least by doing these questions, the management has the opportunity to explain how to think in terms of numbers, which was the problem opportunity for us as creators that Palantir had in the past, where we saw the numbers, but it was not really clear how to interpret the numbers. So we needed to have a Palantir Weekly, 130 episodes to reason on top of these numbers.
Yeah, it's kind of strange because you mentioned that quote, like people will dedicate their academic career to understanding how Palantir is accelerating, how they're proving haters wrong. That's kind of a badass quote, but he ends that, well, we know why, but I don't have time to explain it. So you're like, well, what the fuck was the point of saying that? Like why don't you help people understand your company? Like what?
I know,
it's a badass quote. I love that, but I'm like, why the fuck would you mention that if you're gonna end it with like, I don't have time to explain it? Like, what the fuck?
I think that was just a how we call it, a slap in the face towards his ex-colleagues, in the same way I like to bash on analysts.
Yeah, I would like them to have more questions there from the numerical guys, because even if they're weird questions, it's always better to get more context. It feels so quick. Like Dan and Mariana, it was good questions, but it wasn't like something that gave us any new insight, quite frankly.
I wanted even get the answers to their like pretty basic questions. Like
I wanted a question from De Palma.
De Palma, yeah. Well, Louis wouldn't dare to show up. That's the thing. He wouldn't, even if he was.
Yeah, that's the William Blair one, right?
Yeah.
Louis De Palma, legend.
Okay, so let's get to Chad's original question, which is, how do you value a rocket ship? So we had a Wendy's deal this week, powering their supply chain. We had a Microsoft deal with the government. We're not going to go literally through both of those deals step by step, but both big deals shows the diversification of Palantir, and then we're growing top line 27%. So start off with you, Garcia. Is there any way in your head philosophically to value potentially a rocket ship?
I've been thinking about it since he asked it, and I think the way I can think about it is you value it where you think the rocket is headed to. And when you figure out, okay, this is where the rocket is going to, this is where it's going to land in 5-10 years, what share price do I think it's going to be at ballpark wise? What market cap do I think it's going to be ballpark wise? And is it there now, right now? Like, is Palantir today at a $1 trillion market cap? No. Okay. Is that at a $500 billion market cap? No. Okay. And just go down the line. And for me, I see it at $60 billion market cap. Then I personally will keep buying. Like, I'm not going to be stressing out if I'm going to be getting the absolute best price. You know, yes, I'll keep some cash on the side, but I mean, this is me speaking biased, right? Like, I'm basically all in Palantir. I'm not invested in other stocks. So this is really not for people who are diversified, you know, who are going to be buying the dips on other companies. There's so many out there. But
Sorry
that's the way I'm approaching.
interrupt. I need to leave. Thank you for having me on 1 hour. That's all I had time for. And I'm the reason that we started 1 hour early because I need to go. It's going to be fine from next week onward. So thank you everyone for listening, and thank you for having me on, Amit, and thank you to the great panel. I will catch you later.
Thank you, Amir. See you next week.
Good to see you, man. But yeah, that's the way I'm kind of thinking about it. And that's the way I've been approaching it this whole time. So
Matt, how do you value a rocket ship, in your opinion?
I don't have an answer. But yeah, I was just doing some calculations in the background. And really, it was going back to that 30% growth and that 6 billion potentially that we could get to in 2027. And if you kind of use those ops margins that we were kind of discussing when we were talking about the rule of 40, and you just say, okay, 6 billion ops margin of 40%, that's kind of, you know, not far off from where we are today. And if that continues to persist, you know, I was saying maybe you get to 50% at that point, but let's just say 40%. Then that means you're going to be left with, you know, $2.5 billion of ops cash that you're able to generate. And if you throw a, you know, 25x multiple on that, then you're getting close to about $60 billion in terms of market cap. So the way, if you were to value it right now, it looks like Palantir is kind of valued, you know, almost on a fiscal year 2027 basis. But if you think that margins are going to continue to increase to the 50% or even larger range, and if you look beyond that, and you truly think that growth could expand beyond that 30% per annum, and maybe get to 7 billion or maybe 8 billion by the 2026 time or 2027 timeframe, I'm sorry, then you could say that Palantir is undervalued. But I think we've run a few years ahead in terms of our valuation, and I think everyone's just very excited because I think they know the true long-term potential. And I think we're stuck between a rock and a hard place because, to me, this company is not one to rush revenue. This company is one to make sure that everyone digests, everyone gets an opportunity to truly figure out what they need in terms of being able to figure out their problems and execute them appropriately. And the revenue comes second. And so to me, it's like, while you have this opportunity to grow revenue extremely quickly, to me, I think they're more so figuring out that they have an opportunity to do things and spread and get that full width of the market first before they truly rely on their net dollar retention aspect of the company and take over for the long term. And that's what I've always kind of thought. That's why I never really thought we'd get back to 30% growth. I thought we'd always kind of hang out the 20 to 25%. But I guess with a great product like AIP being released, it's understandable. And I find it hard to believe that, in my opinion, we'll stay stuck here at a $6 billion in, say, 2 to 3 years sorts of revenue when you have something like Warp Speed coming out, when you have other projects that are coming down the pipeline that we don't even know about as retail investors. And I'm sure even within Palantir, there's people that are like, oh, that's cool. I didn't know that project was coming out, right? So it's hard to value a company right now where you're looking at what's out today and you don't have any of the slightest ideas as to what's to come in the future. It's like trying to evaluate Microsoft before they got into Azure, right? Like, you had no idea that the cloud business was really going to come through. And here it is, this massive wave of revenue. And that could be, Warp Speed could be that thing. It could help in trucking logistics. It can help in warehouse manufacturing. It can help in so many different avenues. And it could be the thing like how Palantir is taking over healthcare, it could be the thing that takes over supply chain or manufacturing within the United States. And if that's the case, I think that has a huge implication on the forward revenue projections of the company as well. So hard to value, hard to say, and apologies, I can't really give an answer, but there it is.
Coach Rep says, in my opinion, growth will continue to accelerate into next year, driven in large part by AI success stories and growing partner and developer ecosystem. 2025 is the inflection point. Arnie, how do you value a rocket ship, and do you think 2025 is the NVIDIA type of quarter that we're waiting for?
Isn't it interesting that this 2025 is like the sort of flagship year that already 2-3 years ago we were thinking, oh, 2025 will be the year, and by the time we are approaching to this 2025 it seems like, oh shit, like Carp saw that.
Well, even Carp, remember in 2022 in August he said we won't be profitable till 2025.
Exactly. So all the expectations toward this 2025 being the year where we see the rocket actually really taking off. And in order to answer how do you value a rocket ship, we first need to understand the ontology of a rocket ship. So there was a very nice comment from Jim3482 who said, rocket ships are valued at the cost of operation and the future demand for payload delivery along with competition consideration. If we translate this concept to Palantir, we need to think, oh, how much is worth all the tech they developed in the last 20 years, if we assume they not wasted time, but they deployed this time to actually build the software that matters. So we have 20 years of use cases, not general use cases, but the most complicated use cases in the world, being that pandemic, war, developing efficiency into Airbus, which has one of the most complex supply chains in the world. And there's a second dynamic that is more closer to what Garcia was thinking. If what's the speed towards the object, so toward the goal? But also there, I was thinking, yes, but that's what you can really calculate easily when you know that the speed is kind of fixed. But if I think of a rocket in the initial stages, and Matt here can correct me if I'm wrong, but the rocket starts from still. Initially, it takes a long time to accelerate. You have all that phase where it's like it goes up, but the acceleration, like the speed is not constant. Like the speed needs to accelerate until you reach, I think, what is called escape velocity, after which you really see the rocket taking off. So going back to the question is, okay, at what phase of this rocket are we? I think we are still in the early stages of the acceleration, despite for us that we are here and we saw like the bottom of the growth. This is already like, oh, that's 2x the revenue growth. Like it must be like already escape velocity. But if I think in terms of potential, it's like we are really scratching the surface. So I would, despite I would love and I hope, and I would not anchor myself to these expectations, but it's like it is possible that we could see some absurd numbers in these coming quarters or like 2025, the famous 2025. Maybe we could even see something like crazy 50% revenue growth in 2025 if all the customers acquired in these last years have a sort of direction, as we mentioned previously. 1 year, 1-2 million, second year, 5 million, third year, 20 million. Bam! So how do we evaluate a rocket?
And I think another way to think about that, Arnie, is like, because our margins are so good, it doesn't take a lot of revenue to really add to the bottom line of the organization. And so we've gotten to that place now where we really have been paying for the SG&A costs. We were now GAAP profitable. So literally every dollar that we add in terms of revenue, 50 cents or 40 cents is going to the bottom line, So if you think we add, let's just say double the revenue from here, it's not like we're only going to be at 500 million net income. No, if we double the revenue from here from 2.75 to 6 billion, we're quadrupling the net income because we've already paid for that SG&A, right? We're already paying for that underlying operating costs. Now every dollar that you're adding, as you've alluded to, the operating cost doesn't really move all that much, right? And it hasn't for many quarters. And so because of that, because our operating margins are so high, you're really just having to overcome the cost of goods sold, or I guess the cost of employees at that point, to really get to where you need to go. And so for me, I think that this is the point where even if you're seeing a 30% or 40% growth, you have to think it's way different than seeing a lot of other companies because they don't have nearly the margin that we do. So another company might need to have 40 or 50% growth or 60% growth to even scratch where Palantir is kind of getting, because we have such superior margins. So anyway, just wanted to add that in there as well, right? So if you think about it, if we're at $10 billion in revenue, we're making $4 to $5 billion in operating income. Like, that's huge. You add a 25x multiple or 30x multiple onto that, you're in the hundreds of billions of dollars. And you have to think we're not too far away from that.
Yeah, and like Arnie was saying too, is when you're zoomed in too much, like let's say if you're standing so close to the rocket, as soon as the rocket goes up 100 feet, for you, you're looking up and you're like, oh my God, look how high that rocket is. I'm going to sell everything and I'm just going to go look for the next opportunity. I think that's very short-sighted. Take a couple steps back and think, where is this rocket going in 5 years, 10 years? Are they going to stick around? Are they just a flash in the pan like C3 AI and these other companies that are trying to just take advantage of AI for the sake of AI? I mean, I think people really do need to take a step back. Traders will trade, but if you're investing, then you need to think like an investor and really take a couple steps back and see that, yes, this rocket has gone from 0 feet to 100 feet, but man, this is going to be going to 1,000 feet, miles up in the sky. So that's the way I'm looking at it. And I think people should kind of take a longer term look.
Have you seen the picture from Elon Musk showing how the motors of the rockets evolve? Do you think we have the latest model of the
version 3 Raptor?
The engine? Yeah.
I mean, it's a lean machine. it looks like
it's wild, bro. It's wild. Can you imagine? I hope Archimedes looks like that in like a couple years.
I mean, that's our AAP. So the closer we get to the moon, the leaner, the clearer, the better our engine is.
Yeah, and I think one more thing to add to the valuation conversation is that the government's not going anywhere. The government's only expanding. NATO's a $100 billion market that we have like barely tapped into. In fact, it was CodeStrep on this channel 2 years ago who thought after Russia invaded Ukraine that NATO is going to be a multi-$100 billion market because they're going to need something to defend themselves, like Gotham. And obviously, if the United States government starts spending even 1 or 2% more on AI, that's tens of billions of dollars likely coming into the industry, and then a certain percentage of that going to Palantir. So that, I think, helps the government question. Government growth reaccelerated. We went from 12% to 24%, 6% to 12% for US. Like, we are really starting to see momentum in the government. And if that starts catering at 30%, then it gets as exciting as commercial.
I think we haven't so far really giving merits to the government side, because we were stuck to think, oh, the government side is the mature stuff, 10% growth. Well, not the best, but that's what we get. And then boom, plus 20% or slightly more on the government side is a strong signal that the US government is spending heavily. And not only, because if you look at the math, also government international expanded more or less 20%, because the overall growth was 20%, US government was 20%. So by definition, also the international side was more or less into that ballpark. Now, let me share a couple of thoughts into the self-pleasuring moments with numbers, because we have discussed a lot into the expectations toward the future, the potential stages of a rocket. And I like to always have a sense, that's the best that we can have, into, okay, what is the current price currently incorporating? And
can you zoom in?
Yes, sure. So if we go this way.
Yeah.
Okay, so if we reverse DCF, essentially the valuation we get, we see what the market is currently implying with these numbers. And to obtain a valuation of around 30, we need to have to more than 21% growth diluted. This is a growth at the net of the dilution, so it could be like 26% growth with 5% dilution. So what you get is essentially what I call diluted growth, because you get exactly the same numbers, saying you grow 21% with zero dilution, or 26% growth with 5% dilution. So just to have a sense. And 30% free cash flow margin after tax. And essentially we get $30. This is a 21% CAGR for 10 years, diluted growth, and 30% free cash flow margin after tax is essentially what the current price is actually implying. Now, as investors, we need to think, how reasonable are these expectations for the future, given our real awareness of the company, which I'm confident in saying that in this panel is way superior than the average analyst on the street. And given that we are aware that we could see a growth trajectory that analysts struggle to express. Now, we need to think that analysts, since what they present is essentially an Excel, if they show already an Excel like this, that is hard to justify, because you need to explain why you expect a 20% growth, which is very high, for 10 years. But what happens if the numbers actually improve from here? That's something that an analyst finds hard to justify, because analysts are set to think into linear terms. But I saw once a very nice chart of seeing how the analyst expectations were to compare with the price. And it's like, okay, as the stock goes up, you see analyst expectations rising. Stock goes up, analyst expectation rising more. Stock goes up. The analyst expectation becomes steeper and steeper as the stock goes up. And then the inverse, when the stock starts declining, then analysts expect the trend to continue. And this makes the life of an analyst incredibly difficult when you have a company that works in tech. So it's not linear, at the moment where you have like a real viral growth. So what we could see, rather than a steady 21%, let's say we have an acceleration, like these numbers start to really getting insane if Palantir starts growing, let's say 30% once you also include the dilution. Now, this is an optimistic super bull case. To be clear, it's not what I would anchor my expectations on. And now we see that we are already at $56 per share. But wait a second, the free cash flow margin right now is at 37%, which is insanely high. Let's say that we keep 37%. Now, I think that 37% is a bit dirty, because they were not really paying taxes due to the past expenses. But let's say that with scale, the free cash flow margin tends to expand. So once also we include the taxes, we would stay stuck at 37%. Boom, we reach $70 per share. So this optimistic exercise, tells us if the numbers keep improving every quarter, and analysts could see a future where the numbers are closer toward 25-30% revenue growth, and margins to stay above 35%, the sky is the limit.
I know Amit is as confused as I am, because the periods and the commas are in the wrong place. But a serious question. I'm just kidding. I'm just messing with you. Serious question. Why isn't that in Foundry, and why is that in Excel?
That's a good question. I still haven't.
We gotta get hot chat.
Microsoft has a hook on people, dude. Microsoft is hard to get off.
Yeah, we gotta get Chad to hook you up.
Yeah, and I think too, something I would like to emphasize too is our edge as a retail investor that we have over institutions is that institutions are beholden to certain rules and things that they have to follow. They can't rely on conviction and hope and trust that they're gonna, that the company will deliver. Whereas we have that on our side, where as the retail, when the share price is tanking and all the expectations are in the tank, we have time on our side where we can say, well, I'll just keep accumulating. Like, I don't have to answer to anybody but myself. So that's something that I think earlier this year, the first couple of weeks of January, like, my portfolio was doing very bad. I was kind of dabbling in some options and some other companies, and my portfolio was kind of tanking in January. And that was when I decided to really start allocating to Palantir. And even though the first couple of weeks were very rough, I mean, I think I was down 20% just the first couple of weeks of the year. And I kind of created a fake letter to shareholders. If you guys seen the movie The Big Short, when Michael Berry, he sends a letter to his clients and he says, look, I made a bet. It's going against us, but I'm going to freeze all of your accounts and you can't pull out your money from my fund. I'm going to keep this bet because I have conviction that this is going to pay off and the housing market is going to crash. And he took a massive risk. If he was wrong for a little bit longer, or then he would have been sued. People would have found ways to get their money back. He had to answer to them, and he still stuck to his conviction. Whereas we can stick to our conviction for as long as we remain solvent, as long as we remain out of margin. We're not borrowing money to buy shares. We still keep contributing to our accounts. Like, we have that on our side. So that's something I wanted to bring up.
It took 1 year, 2 years before the bet really took off for Berry. Must have been painful.
Oh, and we're stressing out.
So let's end it on this. Do you guys think we keep 30 in a choppy August, September before the election? Or do you think it was a fun day, but maybe we give it back and retest 25 to 29 before we can really sustainably hold 30?
Who starts?
Arnie, go ahead.
Okay. I'll take my black box with me to try to...
Calm down, Jim Cramer.
To see the future. Let me speculate. I personally think that we see a couple of days back and forth toward 30, because as you showed in the stream, that is a price that makes people think a lot. So essentially you have probably new buyers want to jump in, but you have all the people that maybe started buying Palantir, what was it, like 3-4 years ago already, and maybe they bought very high in the 25 or 30. So in this range, they see green and you say, you know what? I know this is a resistance level. Let me sell at the resistance level. So that's why you have a lot of friction. Probably this friction could stay a couple of days. But I think mentally now we are in a phase where the fundamentals really support these 30. So I had this question like before the earnings does Palantir really deserve $30 now? I would say it can go there, but it's still not really easy to justify it to stay about 30. Now I would say 30 to me is backed by very strong numbers. Since we are talking of a growth stock, essentially what really matters is yes, the numbers, but is the story associated to these numbers. And I would argue the story right now is as better as it can be. Like I struggle to think how better it can really become at this stage. And I personally think the story will keep improving as we progress. So that's hard to say. So personally, I think these days a bit up, down toward 30. Before the next earnings, we will see something, some crazy spikes. But let me speculate. We will reach some extreme high expectations. So that the next earnings maybe we be disappointed and we go back to 30 again, because the dynamic that was very favorable to us, that Emir underscored of the comparison year on year, which was weak, but generated this 70% growth, that makes you wow. We will see the opposite as it happened in Q4. So I think we will have this plus 70%, hey! Plus 40, plus 50% because we decrease due to the comparison is then this quarter 70%, hey! So and the next quarter probably will be disappointed as well. So my expectation is right now from 30, 35, 40, back to 30, and then moon. But pure speculation.
Yeah.
So you don't think we fall below 30?
I think we can go below 30, but now the dip would be both very fast. So
I agree.
If we stay below 30 for more than 1-2 days, institutional investors will be very, very happy to buy. Because look, think as of a CFA. What you're having right now is a company that is GAAP profitable, is accelerating, crazy free cash flow margin. You have a proof that they are the only AI company that is delivering, no bullshit like C3 AI. And they are the only one now also entering in the S&P 500 also. So which means that in terms of appeal of the stock, that becomes something cooler to have, easier to justify. Think how hard it was a couple of years ago when Palantir was decelerating, SBC was still very high, to say to your investment committee, hey, we should buy Palantir, get out of here. And now we say, oh, we should buy Palantir. Why haven't we bought more?
Right. Yeah, that's big. That's a big mindset shift. Garcia, your thoughts on if we keep 30?
I think so. I think we'll keep 30, but we'll definitely chop, just guessing that we'll between 35 and 25. I think we might see some acceleration, to when we hit those levels. I think people will get very excited. A lot of technical investors too. They're like starting to really start, joining on. Like I'm seeing a lot of, cup and handle posts on Twitter now where they're saying my price target with this cup and handle is $45 a share. And a lot of people, when their bias starts kind of confirming, they start piling on, and with the story and fundamentals all kind of creating this almost a perfect storm of it riding up, we could see a good rise. But I'm prepared, to go between 35 and 25. I think the way I've been playing it is just selling a couple calls when I feel that it's starting to get to this level, but I don't sell it on my entire position just because I don't have that 100% confidence. I'm not calling the top 35. I'm just going to say, hey, I might sell a couple covered calls when it hits 35. I might sell it a couple dollars out of this, out of the money, sell $36, $37 strikes when we hit 35. So if we retrace, then I can profit from those covered calls. If we dip down to 25, start selling some cash secured puts at 23. And I've been repeating this process, all year. And frankly, it's been working for me. And something I read is that if you have a system that's working for you, don't get distracted by other things, other strategies. You can learn from others and kind of like take little pieces, but don't switch up your entire strategy because you want to double your money quick. If you have something that's working, just keep at it.
Matt, do you think we hold 30?
For what time horizon?
I would say till the end of the year.
Until the end of the year. Yeah, I'm with Garcia. I think there's an opportunity, especially right now with Microsoft kind of, giving us a little bit of love, and how a lot of other companies that have started to kind of, sorry, my nose has started, it's really bad there. A lot of other companies really starting to fall in line. I could see an opportunity where we spike up to 32.50 or 35. Do I see us maintaining 30? I think if we maintain 27% in 3Q and 4Q, and we don't go below 25% year-over-year revenue growth, then I think there's an opportunity to really stay above that 30% or $30 range. Right now, I would see a case where we could easily drop back down to 25 if the market macroeconomic environment really holds. I mean, I think right now, before we had this earnings call, I was expecting prices to kind of stay around 25, and with the macroeconomics of what was going on in the market, it dropped down to 21, right? And a lot of us bought shares. I'm not talking about last week, right? I'm talking about, a month or so ago when it dropped down to 21. So I could easily see a world where, we're hanging out between 27.50 and 32.50. And it's hard to say without really seeing the third quarter and the fourth quarter. But I'd say if we end up at 2.75 billion in revenue, I would say hanging out at 30 is reasonable. If we start aiming towards closer to $3 billion, if they somehow find, a lot of extra money lying around in the last two quarters somehow, or they get some large deal, then I could easily see a place where we aim towards 35. But for me, I'm sitting here, off of a previous article that I wrote back in February with a fair price towards the end of the year at 25. And I think I need to come off of that in the upward direction. I'm trying to think if I'm actually going to write a price target for year end 2024, if I just go out to 2025 and start doing some gymnastics. I think right now with where I'm at, I was kind of forecasting the 275 always for the revenue. So it kind of makes sense for me, I think, now to maybe start looking out towards year end 2025, because why write an article that's going to be found out in three months time, right? It's just going to show up and it's going to blow by. So for me, I think I need to have a price target for year end 2025. That's what I have for Rocket Lab as well, as a year end 25. So I'd be kind of curious to see if I looked at it, if we get to the 30% mark, in terms of revenue growth in the third and fourth quarter, what that would really put us at. And I'd say if you hang out the 30% mark, I mean, my numbers in my head were aligning a lot with what Arnie's spreadsheet had in there. It was like just shy of 6 billion in revenue in fiscal year 27. And I think the only difference was you don't finish 24 with 30% growth. So because you're coming from 20 odd percent up to 27, 30. So you end up at like, I don't know, slightly below 30%. So in terms of that, you end up slightly below 6 billion. So I'm just trying to think, where you'd end up in 25. But anyway, to answer your question, I can see a world where that happens, but it all really depends on the macroeconomic environment. I think you also have the tailwinds of rate cuts, which Palantir doesn't need, but the rest of the small caps and mid caps do. And obviously with that, you'll drag kind of Palantir into that group. And so that might have some tailwinds associated with it as well.
Yeah, I agree. I think we hold 30, and I think end of year is 35. Rate cuts, if things get really bullish and, maybe a certain president ends up winning and we get another rate cut, then I think 40 is possible, especially if we get to that top line 30%. But I think we're holding 30. We might dip again to like 25, 26, like Garcia said, in that 25, 35 range. But I think now the excitement is there. I think people have figured out, at least to an extent, that AI is real and Palantir is the core thesis behind AI in the enterprise. And now they've got the numbers to back it up that are only going to accelerate. So like, if it's only going to accelerate, the story's only going to get better. Why would it have to go back down into the low 20s unless the whole market takes a dip? So I think
I'll tell you my proxy, my shortcut, my secret. I think if we look at the analyst expectations, it's like what Di Palma says is the price where you need to sell your kidney. Maria is the price that is stick to the reality as of today. So I find myself very aligned always with Mariana. Mariana just increased the fair price, the target price, call it however we want, from 28 to 30. And as I was saying before, I think right now 30 is what the current numbers reflect, with some nice expectations on the future. But we will be happy to be surprised on the future. And we have the knives that previously had a $35 target, now increased to 38 target. I consider the knives the sort of, that is already like the bull case for the year. So it's like my mental model is we are at Mariana price, more or less, we are in the fair zone. If we skyrocket to 40, that is still possible, but I need to be aware that we are in the knife zone, which tends to be very optimistic.
Yeah, I would agree. All right, this was fun. Thank you all for joining. Want to give a special shout out to Mr. Garcia, who made a very sick edit on his Twitter. We're not going to play the edit because it has some copyrighted music, and so YouTube's going to nuke the stream. But I'm putting his Twitter in the chat. I want everyone to follow Garcia if you have not followed him by now. And it's a really, really fun edit that's at the top of his profile. that I think you guys will enjoy. And this is his first time on the show. If you are not following Garcia, he's the meme lord of Palantir, and he understands.
He's the man, dude. Garcia's a great dude. We met him in Vegas last year, and it's almost been a year. Can you believe it or not? I was just talking about that with Hot Chris. We need to figure out something where we can all get together again. But yeah, Garcia's a great dude, and had a lot of fun with him in Vegas.
He knows that, dude. Yeah, like when you guys go to his profile tonight, you're gonna probably be binging his tweets for a good hour. Like the memes are impeccable.
I try posting a meme or two a day, and when I first decided that I would start doing that, I thought it was a very aggressive goal. Like I thought I was gonna burn out after a couple of days. Like, okay, I can't really come up with content. But after following a couple other meme accounts that post other topics, I look at those memes and I say, how can I apply that to finance, or how can I apply that to investing in Palantir? And it just comes so quick. Like when I see it, I'm like, oh yeah, that's totally Palantir right there. And then boom, like I Palantirize it, and it's awesome.
The powers of the memes unlock. And the dirty secret of memes is that the more memes you make, the more inspired you are to make more.
Yeah, well, that's fair.
Yeah. I mean, that really is. And honestly, I feel like it's oh yeah, and look at my really cool thumbnails. I spend a lot of time on them.
Yeah, he's also on YouTube. So he has 790 subscribers. If we can get him to 1,000, that'd be awesome. Has a daily update with memes and a ton of stuff in his videos. So please make sure to check him out on YouTube as well.
Thank you. Thank you for the shout out.
All right. Man. This was fun, man. $30. Exciting day. Happy we got to spend it with the whole community. We'll get a weekend off, and we'll be back to analyze the markets on Monday. And next Friday, we'll be back with Palantir. And we'll keep going from there.
Never saw him.
Never saw him. All right. That's it. Thank you, everybody, for joining. We'll be back next Friday. Palantir, $30. Congrats to shareholders. See you guys next week. Good night, everyone.
Thank you for having me, guys.